In this course so far, we've discussed about all the cash outflows that you have to do to buy your own home, from your overheads to home loan EMIs. In this session, we are going to talk about the possible savings that you have when you purchase your home. Yes, we are going to talk about tax savings or the tax benefits of buying a home and how you can make the most of it. Until a few years ago, buying a home was considered as one of the best investments to make for the purpose of reducing your tax liability. However, things have changed and it may not be the best, but one of the reasons for people to purchase a home. And in this session, we are going to discuss what are the tax saving benefits you get when you buy a home and everything related to taxes when you're buying a home. As Max Baucus said, that tax complexity is itself a kind of tax, and in this session we are going to break down the complexity around the tax, especially with respect to the tax benefits that you can claim when you buy a home. So in this session, some of the questions that we're going to answer for you are: what are the tax benefits that you get on buying a new home? Are the tax benefits that you get from home purchase better than the ones that you got when you were renting a home? And what are the benefits of buying a home in a joint name? And should you go for it? I'm sure you're eager to learn about all the tax savings that you get when you buy a new home. But before we do that, first we're going to discuss about the tax savings that you let go of when you're buying a home. So basically, where you're a salaried individual and you pay rent on your home, you get tax benefits. Now, what are these tax benefits on renting? For the ones who are living on rent, a portion of the rent can be considered as tax deductible under Section 1013A of the Income Tax Act with respect to HRA or house rent allowances for salaried individual. So let's see how does this HRA works and what are the things that you must know of. HRA is basically a component of your salary. It is allowed as a deduction where you pay rent, and there are certain limits which are specified in the Income Tax Act. So where your HRA falls within the limits, you can claim that much amount as tax deduction. It's not necessary that the entire amount that is shown in your salary as HRA can be claimed as a tax deduction. You have to fall within the limits specified under the law. And all the people who are paying rent can claim HRA if it is a part of their CTC. So basically, if husband and wife, both CTC has HRA and they're both paying rent for the house that they're living in, then they both can claim HRA to the extent of the rent they are paying. Let's see how much HRA can you claim. There are 3 limits which are specified, and the minimum of these 3 can be claimed as a tax deduction. The first one is actual HRA received, that is the actual amount in your CTC dedicated towards HRA. The second limit is 40 or 50% of your basic amount of salary or DA. Dearness allowance is only available to government employees. It's generally not a very common CTC component. So the second limit is 50% or 40% of your basic and DA. Now this 40% or 50% is determined based on the type of city you are living in. Where you're living in tier 1 city or a metro city, then it's 50% of your basic salary. Where you live in tier 2 city, then it is 40% of your basic salary. The third limit which is specified is actual rent paid minus 10% of this basic or DA. So as you can see, all the variable factors are considered to determine how much HRA can you claim as a tax deduction. Let's have a look at the tax savings available to Krish and Ananya from their HRA. For the purpose of income tax returns, they are not considered as a couple, but they are taxed individually. So we have to check their HRA benefits individually. But the total rent that they pay each month is 38,000 rupees, out of which 19,000 rupees is paid by Krish and 19,000 rupees is paid by Ananya. So let's have a look at Krish's tax deductions from HRA. Now the amount would depend upon the minimum of the 3 limits specified in the law. So the first limit is actual HRA received. So Krish receives 20,000 rupees in his salary as HRA. The second limit is 50% of basic and DA. So the 50% of 40,000 rupees comes to 20,000 rupees. And the third limit is actual rent paid minus 10% of basic and DA. So the actual rent that Krish is paying is 19,000 rupees. 10% of his basic comes to 4,000 rupees. So the third option limit comes to 15,000 rupees. Now the minimum of these three is 15,000 rupees. That is the third option. So the HRA deduction that Krish can claim is 15,000 rupees. Now because we know that Krish and Ananya have the same payout schedule and are also paying the same rent of 19,000 rupees, then they both can claim a HRA deduction of 15,000 rupees each. So the total HRA deduction that they can claim as a family is 30,000 rupees each month. So now how much will be the tax savings for our two states couple from HRA? So we can see the HRA tax deduction available for a month is 30,000 rupees. So the tax deduction available for the entire year is 3,60,000 rupees. So the taxes that they will save, given that they are in the 20% tax bracket, would be 20% of 3,60,000 rupees, which would be INR 72,000. So in this example, we see that where Krish and Ananya are living on rent and they claim HRA deductions, they save taxes of 72,000 rupees. HRA tax deduction is also available to self-employed people or people with salary who do not have HRA as their tax component under Section 80GA of the Income Tax Act. Under that section, you can claim HRA as 5,000 rupees per month or the actual rent you pay, whichever is lower. So in case if you're one of those, then it's a good practice to check if you're saving any taxes over there. So with this, we understand that HRA is in fact one of the largest tax deduction component for many salaried individuals, because as your salary increases, the HRA component of your salary increases, and when you're living on rent, you can claim the entire amount as your tax deduction. However, one thing to note is that when you buy a home and stop living on rent, you have to give up these HRA tax benefits. They will be no longer applicable to you. However, new tax benefits which are available on home purchase, on your home loan EMIs, will be applicable to you. Let's have a look at what are the tax benefits you get when you buy a home. As we just discussed, that tax savings are available when there is a cash outflow in the form of rent for HRA, and when you're buying a home, that cash outflow happens in the form of home loan EMIs. So the tax benefits that you get when you buy a home is from this home loan EMI. As your EMI is split into two components, principal and interest, you get a tax benefit for both of these components. The interest portion of your EMI that you pay, you get a deduction for that under Section 24 of the Act up to rupees 2 lakh each year, and the principal portion of your EMI, you get a deduction for that under Section 80C of the Income Tax Act for 1.5 lakh rupees each year. I am sure you must be aware of the Section 80C. This is one of the most common sections and the tax deductions that we all claim towards various other investments. Apart from these two, there was another third option that people had who were buying a home of value less than 45 lakh rupees up to 31st March 2020. Now, this deduction is no longer available because we are way past that due date. So you just need to remember two deductions. Deductions for interest under Section 24 up to 2 lakh rupees and under Section 80C up to 1.5 lakh rupees. Now the second payout that happens when you buy a home is towards stamp duty and registration charges paid. As this payout happens only once in the year when you make these payments, this deduction is also available only when you make them. So the year in which you buy a home and you pay for stamp duty and registration charges, you can claim 1.5 lakh rupees that you pay for that under Section 80C of the Act. This basically indicates that the year when you buy a home and you're paying stamp duty and registration charges, you need not go ahead and arrange for further funds to invest for your 80C tax deductions. You can claim this amount for the same. So this would basically help you release some cash flow. Now let us clarify that the ATC deductions for the principal portion of the EMI or stamp duty and registration charges are not additional tax deductions, but they fall within the limits that is available to everyone. They are basically two added optional expenses that you can claim. So now let's see what are the tax deductions that are available for Krish and Ananya. We've only taken an example for an individual here to help you understand this. So for the purpose of calculations, we've considered that they're claiming 2 lakh rupees as interest because clearly they are paying more amount as interest on their EMIs per annum. The deduction for principal also 1.5 lakh rupees is claimed fully from the home loan. The total tax deductions that they can claim is 3.5 lakh rupees. So the taxes they save on it is 70,000 rupees at 20% tax bracket. However, please note that there are additional education cess and surcharge which is levied on the tax liabilities mentioned in the examples so far. We've not included them for simplicity and explanation purposes. One point to note here is that the tax deductions which are specified for home buyers are subject to the actual amount that the home buyers pay each month towards principal and interest. So for instance, Krish is actually paying only 1 lakh rupees towards principal each year, then he can only claim 1 lakh rupees as a deduction under section 80C. And over the tenure of the loan, as the interest amount on your home loan reduces, there is a possibility that the interest that you're paying on your home loan is less than 2 lakh rupees. In such a situation, the amount that you're actually paying as interest will be claimed as a tax deductions. When we're looking at these numbers for Krish and Ananya together, then they must check that the principal amount that they're paying each year is more than 3 lakh rupees and the interest amount that they are paying is more than 4 lakh rupees. Where it is less than these amounts, then the deduction that they can claim is the actual amount paid or the limit specified in the law, whichever is lower. Hence, it is very important that you check the loan repayment schedule that you get from your bank to know the actual amount of interest and principal you are paying each month to claim the right tax deductions. Now, once we've understood the tax benefits of renting a home and buying a home, let's compare the two and see that in which situation do you save more taxes. So comparing the tax deductions, under rent, we've discussed that you can claim HRA from your salary. In our example, the rent was 30,000 rupees per month. So they could claim a tax deductions of 3.6 lakhs rupees. And when you buy a home, you get a deduction for the interest that you pay on your home loan and the principal amount as well. So you can get a total deduction of INR 3.5 lakhs. However, as a couple, the maximum HRA tax benefits that you can claim is up to the rent that you are paying per month, even where you have higher HRA in your tax salaries. When you buy a home, you can claim a tax deductions of up to 3.5 lakh rupees each year, subject to the fact that you are actually paying that amount towards interest and principal. In fact, where there are co-owners of the home, then they together can claim a tax deduction of 7 lakh rupees, that is 3.5 lakh rupees each. But it is very important to note that they must pay that much amount of EMI each month from their own accounts. There has to be a cash payout from both the co-owners to claim this tax benefit. So let's look at the numbers to get a better idea. When they rent a home, the total tax deductions available to them is 3,60,000 rupees. So the total tax savings is 72,000 rupees. Whereas when they buy a home, their tax deductions increase to 7 lakh rupees. It doubles, and hence the total tax savings that they have is 1,40,000 rupees. Now you may have questions as to how you can check for yourself as to what are the exact tax benefits that you're getting when you're buying a home versus you are renting a home. So we have prepared a tool for you. So from the next segment, you can download the tool so we can run through it together. So this is the tool which is tax savings when you rent and when you buy a home. You already know by now that you have to edit the numbers which are highlighted in gray. Now this tool is made from a perspective that there would be two co-owners of the property. So where you are in that situation, you can fill in both the columns as you go with it, or where you're an individual buyer of the property, just delete one column and stick to one column for data input. So first we're going to look at the tax benefits that you get from HRA. Now we've specified all the three limits and you can input your numbers accordingly, where option 1 is the actual HRA you receive, the option 2 is 50 or 40% of your basic salary, and option 3 is the actual rent you pay minus 50% of your basic. So this will tell you how much HRA you can claim and the months for which you are actually paying rent to give you the total HRA tax deduction available, and eventually compute the total taxes you're saving on HRA deduction. Please ensure that the numbers you put here are the actual amount that you're paying each month towards rent. Now the second part of the tool looks at the tax deductions that's available to you when you buy a home. Again, there are two co-owners and hence there are two columns, so you can put in the numbers accordingly. So the first part discusses about ATC deductions, that is 1.5 lakh rupees, and then you can further specify that are you claiming the total amount from home loan or you're claiming it partially. Then second, you need to specify how much are you claiming from home loan. So this amount is subject to whether you're claiming any other investments towards this tax deduction, and the balance can be claimed towards home loan EMI, and also to ensure that the amount that you're claiming towards home loan EMI is actually paid out by you each month or paid out by both the co-owners each month. Only specify that amount here to get the correct answer. Then the part 2 talks about interest deductions, where you first write the actual interest paid out by each co-owner. You can get this number from the loan repayment schedule, or you can also ask your bank for the interest and principal breakup schedule of each year. Then the interest deductions which are specified under the law, and it will compute how much interest you can claim for your tax deductions, giving you a total tax deduction and the taxes saved individually and as a couple. So we in the end come to the final conclusions that the taxes saved on renting is 72,000 rupees in case of Krish and Ananya, and taxes saved on buying is 1,40,000 rupees. So the net taxes that they're saving in this case is 68,000 rupees. And as we have earlier also specified that there is no hard and fast rule that you would always save taxes when you're buying a home, where your HRA benefits were larger than the benefits that you're claiming on buying a home, you could actually be paying more taxes in the case of buying a home. So please go through this tool properly and input the numbers based on the comments and instructions given for the same. After you've understood the tax benefits that you get when you buy a home versus when you rent a home, the next question on anyone's mind would be, is it possible to claim both? Can I claim HRA benefits and also home loan benefits? So well, yes, you can claim both HRA benefits and home loan benefits where you continue to live on rent in spite of buying a new home, and you can substantiate that you're living on rent in a second home for your work reasons, because you're getting HRA as a portion of your salary. So you have to substantiate that you're living on rent because you want to be closer to work or it's convenient for work. Then you can claim your HRA benefits and also claim the home loan benefits where you've bought a home. So let's understand this with this example, that if you have two apartments and you have solid reasons to have both the apartments, say the rented apartment for which you're claiming HRA allowance is closer to your work and it makes it very convenient and comfortable for you to work, then you can claim HRA benefits. And separately, you've bought a house in an area where probably your parents stay, or it's something that you can afford, or you see yourself moving there in the next few years. So there you can claim home loan tax deductions for the same. Now these two homes can be in the same or different city. Until you can substantiate the reasons of having two homes, you can claim both the tax benefits. So the things that you need to keep in mind is for claiming the twin tax benefits or the dual tax benefits is that one, you have to substantiate and have proof for the reasons to claim these tax benefits. HRA of course should be a part of your salary, so only salaried people can claim this benefit, and a specific amount should be paid towards rent each month. You must be staying in the home you are claiming HRA for, like it cannot be some fraud arrangement, and you should have reasons to live on rent in a different apartment in spite of having your own house. Where you can put these three things in place and it's a genuine case, you can continue to claim both the tax benefits. Now after these points are considered, the next discussion that we want to talk about is the benefits of joint ownership of the home. The first benefit is the increase in loan eligibility. Clearly, when you buy a home as two people, your income increases and hence your loan eligibility also increases. There is no legal problem or hassle for transfer of property from one partner to another in case of any mishap. You also get double tax benefits. We just discussed about them in the first half of this session. And there are additional benefits like you get reduced interest rates or stamp duty charges for women first owners. Let's take one reason after the other. The first reason being the increase in loan eligibility. Now if we take only Ananya, and with her income of 1 lakh rupees, if she were to go and get a home loan, she would be able to buy a home of value 62 lakh rupees. Now because Krish and Ananya joined hands and they work towards getting the home loan and home together, now they can afford a home of 1.25 crores. So clearly it's double of what they could afford earlier. Double tax benefits, where Ananya only went for tax benefits, she could claim up to INR 70,000. When they go together to claim the tax benefits, they can save up to INR 1,40,000 rupees. Subject to actual payments made by each of them each year towards principal and interest of their home loan EMI. Now after this benefit, the third one is reduced interest rates for women. Now many banks and financial institutions are encouraging women to take loans to become more financially independent, have a home in their own name, and one of the ways to do that is by offering beneficial interest rates to women. So where Krish is the first owner, his interest rate is 7.5%. So the total interest he has to pay for the home loan is approximately 93.34 lakhs. Where Ananya is the first owner, the interest on home loan that's available to you is 7.45%. So basically an interest savings of 0.05% on a home loan of 1 crore. So the approximate total interest that she has to pay 92.60 lakhs. So where Ananya is the first owner of the home or the only owner of the home as a woman with reduced interest rates, she can save total interest of 74,000 rupees. So definitely a little push for women to go ahead and be more independent. Hence it is best to check with your bankers for information on interest rate savings for women or any other processing charges or any other benefits that they are giving out to their women home buyers. In fact, you can also check for stamp duty charges in your state. So in state of Maharashtra, from 2019, there is a reduced stamp duty which is levied for women home owners. So for men, the stamp duty that they have to pay on home is 6%. So in our case, that would be 7.5 lakh rupees, where Krish would be the first owner. However, if Ananya is the owner of the home, then the stamp duty she has to pay is 5%. So she gets 1% reduced stamp duty. So the total stamp duty she has to pay is 6,25,000 rupees for the year. So here in stamp duty as well, Ananya is able to save around 1,25,000 rupees. So overall, the benefits that Ananya gets by being the first owner of the house has helped them save around 1,25,000 rupees towards stamp duty charges and 74,000 rupees as interest over the entire tenure of the home loan. With these examples, we get an idea that yes, joint ownership can definitely be superior to single ownership from a financial and even a legal perspective, right? So if you and your spouse buy a home together and anything happens to either of you, the home gets transferred to the second spouse without any hassle. So that definitely ensures security for both of you. So clearly, where you're married, it would be a good option to consider ownership of the home together. In the last part of this session, we're going to discuss about the tax deductions that are available on the interest that you pay on your home loan. So we've already discussed that the standard deduction on the interest that you pay on your home loan is up to 2 lakh rupees per annum. But is there more to it? Because many times when people buy homes for 1 crore or above in metro cities in India, you are paying way more interest than that. So is there a way that you can claim higher tax benefits for the interest amount that you're paying on your home loan? So where you want to claim tax deductions for the interest that you pay over and above 2 lakh rupees per annum, the new laws were introduced to help you claim the additional tax benefits. Basically, any interest that you pay for over and above 2 lakh rupees per annum can be carried forward for the next 8 years. And in those 8 years, if the interest that you're claiming as a tax deduction is less than 2 lakh rupees, then this carried forward amount can be adjusted and your total tax deductions for the interest amount can be 2 lakh rupees. Let me explain the same to you with an example. So we know that interest amount over 2 lakh rupees can be carried forward for the next 8 years for tax deduction purposes. So in year 1, we see that the interest that you're paying is 3 lakh rupees. So the carry forward can be done to up to 1 lakh rupees. 2 lakhs is claimed in that year. In year 2, the interest that you're paying is 2,75,000 rupees. So the amount that you can carry forward is 75,000 rupees. Now we've already seen in our home loan repayment schedule session that as your years of home loan increases, the interest portion in your home loan reduces and the principal amount increases. So it is very much possible that after a few years, the interest that you're paying on your home loan reduces below 2 lakh rupees. So in our example, for convenience purposes and easy to explain, we've considered that in year 7, the interest is reduced to 1.5 lakh rupees for the year. So now they're short of 50,000 rupees. So they can claim that amount from year 1's carry forward interest. So in year 7 also, in spite of not paying the entire 2 lakh rupees as interest, you can claim the tax deduction for 2 lakh rupees. Now in year 8, the tax deduction interest paid is 1,25,000 rupees. You claim 50,000 rupees from year 1 and the balance 50,000 rupees of interest can be claimed from the carry forward of year 2. So this ensures that in year 8 as well, you can claim tax benefits of 2 lakh rupees. So this is how interest carry forward can help you reduce your tax liabilities. For Krish and Ananya's case, we know that they both taken home loan together and are also co-owners of the home. So they both can claim tax benefits and are claiming 2 lakh rupees of interest each year. Anything additional than that can be carried forward. So now for the tax purposes, they are both individuals. So where they are both paying for it, they can also carry forward the interest benefit. However, you should know that together what happens is that anything about 4 lakh rupees can be carried forward as they each get a benefit of any interest above 2 lakh rupees being carried forward. Now to understand this breakup of how much is being carried forward and how much interest is available, every year the bank or the financial institution from whom you've taken a loan will issue a certificate with the breakup of interest and principal, and that will help you to claim these two benefits properly. Once your interest starts going below 2 lakh rupees, it's important for you to maintain these records so you can claim the interest above 2 lakh rupees from the previous years and adjust it against the years where the interest is less than 2 lakh rupees. Now another interest right, that comes into play when you're buying a home, especially when you're buying a under construction home, is the pre-EMI interest. If you bought a home in an under construction property, your home loan would get disbursed in tranches and your EMI does not start, but you start paying interest for the amount of loan that is disbursed. This interest is also known as pre-EMI. So now, is there a way that you can claim a tax deduction for this pre-EMI amount or the interest that you pay on your home loan amount while your house is getting constructed? Well, yes, you can do that, but not in the years in which the house is under construction. You can start claiming tax deductions for your home only after you attain the ownership of the home, that is only after the home is ready and constructed. So all the interest that is accumulated before the 3 years, so say your construction took 3 years to complete, so all the interest accumulated till then can be claimed for the next 5 years in 5 equal installments. So where my pre-construction EMI or pre-EMI was 4.5 lakh rupees, I can claim 90,000 rupees for the next 5 years. However, it is important to note that this deduction of 90,000 rupees will come under the 2 lakh rupees umbrella of interest. So in most cases, right, where you're buying a home, your home loan EMI interest portion itself covers the 2 lakh rupee that, these pre-EMI interests do not get really adjusted against it. However, it's important to calculate for yourself and see if you're getting any tax benefits and claim it to the fullest possible. Let me show this to you with an example. That in Krish and Ananya's case, the interest on home loan from the first year to 5 year itself is 7.5 lakh rupees to 6,79,000 rupees, which is way more than 2 lakh rupees, and hence this amount itself is breaching the 2 lakh rupees tax benefits available to them. So no pre-construction interest will anyway come under this limit, but it's important to know the sections and the laws, so in case if it's applicable to you, you can make the most of it. So some of the points that you must keep in mind when you're claiming income tax deductions are that the deduction on your home loan interest cannot be claimed when your home is under construction. The deduction of up to INR 1.5 lakh on your home loan principal is allowed only on the home which you have occupied or it is vacant. If you put the home that you've bought on rent, then you cannot claim the principal tax deductions. The deductions are allowed only after you get the possession of the home, so clearly you don't get the tax deductions when the house is under construction or it's stuck for any other reason. The home should be registered in the name of the person who's claiming the tax deductions. That is, the deductee or the assessee should be one of the owners of the home. And the loan should also be taken by the deductee. So basically, you should be the co-owners and the co-applicants. Interest on loan that is taken from friends and family can also be claimed as a tax deduction, provided you have proof, documentation and bank entries to substantiate the same. With this, we come to the end of the session tax benefits. We are aware that there are many small things to keep in mind when you're claiming tax deductions, from the tax deductions available to you when you buy a home, to the deductions that you're letting go of when you rented an apartment, comparing the two and using the tool to know your effective tax savings, and also understanding your joint ownership benefits. We would advise that consult your financial advisor or your tax consultant or chartered accountant who can guide you better on your tax saving benefits, so that you leave no loose ends when you're filing your income tax returns claiming any of these benefits. So what are the top 3 learnings from this session? You can save taxes by taking a home loan on the interest you pay up to 2 lakh rupees per annum and the principal you bear on the home loan of up to 1.5 lakh rupees. You can carry forward extra interest from your home loan schedule up to 8 years over and above 2 lakh rupees and set it off against the future years in which it is less than 2 lakh rupees. Taking a loan in joint ownership and with women as the first owner or just as a single woman has many financial advantages. So ensure that you look at all the parameters before you finalize your decision. Finally, I would like to reiterate that better consult a financial advisor or your CA to claim your tax benefits properly in your income tax returns. In the next session, we will be discussing about your home purchase roadmap. So we're going to discuss about the various steps and phases that you go through when you're finalizing your home purchase deal.